those that own gold and silver will become mini banks themselves, because that's going to be the collateral for whatever type of new currency ultimately comes about after everything collapses. And when I say ultimately, they definitely are going to try to come out with central bank digital currencies. And I believe those are going to fail because they're no different at all from fiat currencies, with the exception of everything that you do can be tracked. But there will not be confidence.
The renowned analyst Bill Holter believes those who possess gold and silver could become their banks in the future. These precious metals might be the collateral or backing for any potential new currency emerging following a financial crisis. Holter doubts the success of central bank digital currencies, viewing them as similar to traditional fiat currencies and lacking the ability to inspire trust. Instead, he envisions a scenario where gold and silver maintain their value and play a foundational role in establishing a new currency system supported by tangible assets. The record streak of central bank gold purchases that began in 2022 has also driven investors to allocate the largest percentage of their portfolios to the precious metal since 2012, according to a newly developed metric unveiled in a recent report from analysts at JPMorgan. In the first 6 months of 2023, central banks worldwide acquired an unprecedented 387 tons of gold, marking the highest H1 purchase of gold volume since 2000, when the World Gold Council began recording such transactions. Holter explains that central banks are buying gold because they understand that the US dollar is under pressure and they hold significant dollar reserves. As the dollar weakens, it creates a significant liability on their balance sheets, which they seek to hedge by acquiring gold. In this context, gold is a way to protect against currency devaluation. Concerning the potential shift from the current US dollar to a digital dollar, Holter emphasizes that this transition doesn't alter the challenging financial situation of the US Treasury. In fact, any newly introduced currency must instill confidence by having tangible assets as its backing, with gold and silver being the most appropriate options given their historical significance as forms of currency. Let's watch the excerpts from Bill Holter's interview with As Good as Gold Australia. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
As far as the central banks buying gold, do what the central banks are doing. Don't do what they're telling you to do. I mean, central banks are buying gold for a reason. They understand that there's only a short timeline before the dollar craters. And what is the dollar? Roughly 60% of reserves that central banks around the world hold. So that is going to be a huge smoking black hole of zero on balance sheets of central banks. And what they're doing by buying gold is they're trying to own something that will call it explode in value, whatever you want to call it, to fill up the big black hole that's going to come once the dollar collapses. So do what the central banks are doing. Don't do what they're saying or telling you to do. As far as becoming your own central bank, you want to get your assets out of the system. The system is in its entirety is all about liabilities. Everyone, every bank, every entity either owes or is owed, and those debts are not going to be paid. So when the music stops, if you're not even on the dance floor, you're insulating yourself from liabilities that are failing within the system. And to get out of the system, how do you do that? If you own stocks, call your broker and have your broker either send the shares to the transfer agent or have the shares issued and sent to you. That way you don't, if your broker goes down, your shares are on the broker's books. Your shares are on their balance sheet. They own the shares for your benefit. But if your broker goes down, it could be years or maybe never that you get your shares back. I mean, you want to exit insurance contracts. You want to exit having money in the bank. In the U.S., If you put money into the bank, it's not a deposit. What it is it's no longer your money. It's the bank's money. And
It's
if
right.
they fail,
Yeah.
if the bank fails, I mean, written in law within the FDIC, they're not going to do bailouts. They can't possibly mathematically do bailouts. They will do bail-ins, and that is the law now. Is that they're going to do bail-ins, and what that means is they're going to take part or all of your money to save their own asses. Uh, with gold and silver, if you have gold and silver in hand or in a private non-bank vault that's out of the system can go down and you still have wealth. You will have wealth when the system starts to come back up. And those that own gold and those that own silver on the backside of what's coming. I mean, if the US goes from a dollar, the dollar the way it is now, to a digital dollar, what has changed? Has the financial position of the US Treasury changed? No. By the time we get the central bank digital currency, the Treasury will be even in worse shape. So they're definitely going to come out with a CBDC, but there will be some type of new currency on the backside. And any new currency is going to have confidence behind it. And the only way to build confidence is to back it with some type of real asset. And the best real asset to back a currency with is gold and silver because they are money. Oil's not money. Wheat's not money. I mean, you could go down a list of commodities. They're not money. Gold and silver are the definition of money.
The recent failures of the bank's First Republic, Silvergate, Silicon Valley Bank, and Signature have set off an ongoing banking crisis. First Republic, the second largest bank in U.S. history to fail, was absorbed by JPMorgan in a last-minute deal with Treasury backing. These failures were primarily caused by issues like concentrated funding sources and poor management of interest rate risks within these institutions. The fear of contagion created anxiety for depositors, investors, and regulatory bodies. Holter highlights an existing strain within the banking system, often unreported in the media. The Federal Reserve is injecting liquidity into the system, with the use of this funding source reaching all-time highs. This suggests that underlying problems within the financial system are causing stress, even though they may not receive widespread attention. Furthermore, Holter acknowledges numerous worldwide challenges and tensions encompassing political instability in the United States, geopolitical conflicts, global financial pressures, societal issues, and threats to the rule of law. These complex problems seem escalating simultaneously, making it difficult to pinpoint the exact trigger for a significant financial crisis. He stresses the importance of being prepared, emphasizing that individuals may have a concise time frame, possibly as brief as 72 hours, to adjust when a significant financial event occurs.
What's happening is the interest rates that banks are paying are lower than what you can get in T-bills. It's lower than what you can get in money market funds. So you're getting a natural flow that way. But you've also got people, because of what happened back in March and April with those four banks, and many people don't know that those four banks, the assets of just those four, totaled more than all of the assets of all of the banks that went down in 2008, 2009. I think you've got some big money, some savvy people that have had uninsured deposits, and they're simply moving their funds into T-bills, direct Treasury direct, and that is a way basically to insure your uninsured deposits. So it's a natural reaction, and to lose $1 trillion in deposits, and it's only going to get bigger and bigger. The Fed is offering liquidity, and the use of that funding source is at all-time highs. It's never been this high. So there's already stress in the banking system, but it's not reported on. It's being smoothed over from an information standpoint, but that doesn't mean that it's not happening. It is happening. If you look pretty much everywhere you look, the pot is boiling, whether it's and this doesn't obviously involve the rest of the world, although from From a confidence standpoint, it does. If you look at politics in the US, if you look at geopolitics, if you look at finance all over the world, if you look at uh, societal issues, if you look at the rule of law, everything seems to be breaking down all at the same time. Can I tell you what or which of the 100 or more potential boiling points it will be? I can't tell you. If you ask me time wise, I can't tell you, but I can tell you that everything seems to be boiling at the same time, and it's only going to take one event to blow the lid off of everything else. So the important thing to understand is you need to be prepared, because when this happens, it's only going to take 72 hours for your entire world to change. And either you're in place or you're out of place. And if you're out of place, you will not have the ability to get in place.
In the evolving financial landscape, the resurgence of interest in gold and silver as potential pillars of new currencies suggests a profound shift in how we perceive and safeguard value. As central banks stockpile gold at unprecedented rates, these institutions are bracing for a transformative monetary future. Do you think gold and silver will be essential in shaping our future currency systems? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.